What's up, good kids? I'm coming to you live on tape wearing my tropical shirt because I have a cruise coming up in about a week, and I'm a cruiseaholic who's also a stock junkie. And I could keep going, but I should probably just stop and ask you, do you ever feel like you're stuck trying to figure out what to do with your stocks? You aren't alone because today I'm going to cover what's inside my mind to help you stay ahead of the market and take control of your portfolio. If you don't know me, I'm Justin. My friends and my coaching students, they call me Mr. Money Maxwell because I've built amazing wealth through the stock market. I retired early and now I'm here to give back to you, the good kids. Jay Powell, he finally gave us what feels like the most anticipated rate cut ever. And I've been hearing about this for what feels like a year. We have November's elections. They're going to be here before we know it. So let's jump into an overview of the blog I posted over at Good Kids Trading, which, by the way, let's jump over and look real quick. Good Kids Trading is a free website, and I have a great Discord you should check out. I post my trades here. These are just some winners from the week. If you aren't sure how to trade options, take a look there. We have a great general chat. You can check in, see what's happening. We give real-time updates. That's the pitch for today. It's all free. Have a look. Let's jump back into the blog because I think there's a lot we need to talk about. Like I said, we have J-POW, we have the elections. What should you do? I personally thought that the Fed was going to cut by a quarter basis point. Jay surprised me. He didn't surprise the market because they had already really priced it in. If we go and we look over at the CME watch tool, we can see that, this is for November, right? But it's like 50-50. Well, the market had already priced in the 50 basis cut. So the market wasn't surprised. So when you go and you look at SPY and you see on Wednesday that the market really didn't move, it's because they had already priced in exactly what Jay had talked about. So it wasn't really a surprise for the market, but what I am thinking and what is a little bit alarming to me is, did Jay wait a little too long to cut interest rates? You can think what you want. I guess we're going to see because, as you know, when they cut rates, it's a lag. There's a lag in the data. So if they did wait too late, more than likely, we're going to not know until afterwards, which is slightly concerning, or it could be concerning. Um, I think that one of the key insights comes from the dot plots. And if you don't know what the dot plots are, basically each one of these dots represents an individual who is on the FOMC. And they're telling us where they think rates are going to be over the next couple of years. Let me blow it up a little bit. I know it's very small here. Let's take a look over at the actual summary of economic projections. So this was in June, right? And this was 2024. And pretty much everyone thought that rates are going to be pretty high, and then they have it kind of gradually going down into 2026, right? You can see over here are the rates. By 2020, long run, I guess that's about 3 years away. They're looking for rates to be down by 2.5%, which is, pretty good. But it's slow, right? They didn't expect it to be in 2024 and 2025. But now let's look at what they just put out in September. Can you see how they have gone ahead and they've moved these over? So they've taken them and they moved them just a little bit sooner. They moved some of the rate cuts to 2024 and 2025, which we didn't see back in June. So I think that's important for us to take into consideration. And I wrote about it here. I think that we have to continue. The dot plots are historically wrong. Okay, like you can look back in history and you'll see that all these dot plots are just like the best guess from the FOMC members, and they're historically wrong, but so many people focus on them. I think the way that I think about this is we just use these as a data point. So we understand now that the FOMC individuals think that we're going to move the rate cuts sooner into 2024 and 2025. What does that mean for stocks? Let's talk about it, because historically, if you move rate cuts, that's good, right? As long as the economy holds up, as long as when you cut the rates, we get that soft landing that everyone has been thinking about, hoping that we get, because historically, the soft landing means we don't fall into a recession where economic times are a little bit harder. Things the stock market's not going to perform as well. People are going to have much harder time with their jobs. But I think what we do know is when we look at the central bank and we look at the bigger picture, we know that central banks right now, they're prioritizing financial stability over the strict price control that they were looking for. You hear Jay, if you've been paying attention or you listen to some of the news, you know that Jay Powell wants to get the rates around 2%. Well, we're not at 2% yet, and he's already put in not just a 25 basis cut, but a 50 basis cut. I think that we saw, like, we'll get into the charts very soon and we'll take a look at what happened exactly. But um, the market initially on Wednesday, the market digested the news pretty well. Did It didn't really move the markets a whole lot up or down, but on Thursday, the day after rates came out, we saw that the market really took off because it started processing that not only did Jay cut by 50 basis point, but he's looking at another November cut, right? And the market is taking that as good news. But I think what we have to also focus on, and we don't get political at Good Kids Trading, but we do talk about the issues and what affects the market. So we have to look to the upcoming election because the way the market works is it hates uncertainty. Like, we all hate uncertainty, right? Like, let's be real. We don't like to know what if things are happening and we're not sure of the outcome, we all get a little nervous. Are the Republicans going to sweep the House and also get the president? Like, are we going to have like a mixed, like, what is going to happen with economic policy based on the election? And I saw a really great chart from Tasty Trade, and I think we should take a look because we need to think about what's best for our portfolio. Not so much what the FOMC is going to do or who's going to win the election. Like, we want to make money. You want to make money, right? I want to make money. So we cannot ignore this chart. And history doesn't always repeat itself. Sometimes it rhymes. We talk about seasonality. I'll talk about seasonality a little bit more in a second, but let's just look at this chart. We can see all of the elections. They're highlighted with the black boxes. The person who won. And we can see that on average, September, October are bearish. So yes, we did have, 2012. We had a little bit of bullishness, so we kind of white is like a zero, right? But you can see the red highlights, like on average, bearish months. Now, so far, September has proven to be very bullish. We're at all-time highs on SPY. So we need to understand that seasonality and historically in an election, September, October are often bearish. The market's not there. So when we're thinking, like, do you want to put on a lot of risk when you see outputs like this? Let's go ahead and look just a little bit more at some of the seasonal headwinds. Like, I just pulled this from one of my tools, but like SPY, you can see like September, the last 16 years, the average returns have been a negative 1%. That doesn't mean we should always be, long-term bearish. You can see the market came right back, right, in October and November. Same thing with the Qs. Tech has been a little bit weaker. We'll talk about it in just a second when we look at the charts. But same thing for September. Like, the last 16 years, on average, the Qs have been bearish. They've been down. Now, we all know, like, average doesn't mean it's always that way. You can have, the other side of the average means that sometimes it's up. So will this year be different? I don't know. But I think that as we are at all-time highs, we need to be cautious. I don't think this is a time to be all risk on. Earlier last year, we were risk on. I was putting on a lot of trades. I was posting them in our Discord. I was taking 10 trades a day, sometimes like 100 trades a week. Like, right now, I might be getting 10 trades a week. You saw in our Discord, like, I'm not posting as many trades because I'm looking for opportunities. As we have money and as we have relatively risk-free money in bonds and SGov, why would we be putting on a lot of risk at all-time highs? Do you really think that money's going to double or triple? It could. Like, I have a couple of services that are talking about the SPX hitting 6,000 by the end of the year. It's possible. But I think over the next 20 to 30 days, we should be cautious. We should see how the market's going to react. We need to understand there's uncertainty and the market hates uncertainty. So, my simple strategy is boring to some, but it's profitable to me. And it's to buy low and to sell high. And I know that the market has positive drift. That means over time, like, yes, the next 20 to 30 days are historically bearish. Doesn't mean this year will be. But for me, that means that money that I plan to use in my trading account, I am going to be a little more conservative with. That doesn't mean money in my IRA that I don't plan on touching for 10, 20, maybe even more. I'm going to do a whole lot with that because the market over time, it goes up. So I know that yes, it could have dips and we could have drawdowns, but I believe that we can see opportunities and trade them. And I'll talk about some opportunities that we took this week. I'll talk about some opportunities that I see in the market as well. And we'll talk about some simple strategies that you can apply. And I write about this at Good Kids Trading, but I think sometimes it's good to just have a video blog because not everyone likes to read. I get it. So, my plan moving forward, like I said, is to be cautious. I want to see what's going to happen. I wrote about this in the blog on goodkidstrading.com. Check it out if you want, totally free. But I think there are really great ways to use technical analysis, which is looking at the charts, and math-based trades to find opportunities and take advantage of that positive drift that I was just talking about. Check out the blog. I won't say it anymore. There are no dividends this week, so we don't have a lot to talk about in terms of dividends. Let's go jump over and take a look at some of the stocks as my screen turns black, which is great. These are the weekly candles. So, let me zoom out just a little bit on this chart and just take a look at SPY, which is the S&P 500, top 500 companies of the United States. And I mean, for 2024, we are up. Where are we? Right in here. So we're up just a measly 22%. That's pretty good, like 21%. It's been a really good year in the markets. And I know that we've had a couple of down weeks where the media has talked about how things have been so horrible. And if you zoom out a little bit, you see like we're doing really good. We've had quite a run. I know that for the good kids, we were risk on in this area here. Like this is where we were all in. Let's put our accounts in. Let's really go for it. That was back here. It wasn't when we're like we're pretty extended. We're almost 20% extended off of the moving averages. Let's just take a real quick look here at the daily chart on SPY. Because I think that if you're a buy the dipper, which some of us are, some of us aren't, but if you're a buy the dipper, like buying off the moving averages here, like the weekly 100, the daily 100 worked out really well. This is the area where I've been trimming and I've been posting my trades in our Discord so people kind of understand. But like I'm looking to trim here. Like, could we move higher? Absolutely. Like I said, some of the services I pay for think that we could get to 600 by the end of the year. We have a little ways to go, and we have some uncertainty. I think that we finally got some strength and rotation back into tech. The QQQ is basically a technology ETF, and when you look at the weekly chart, like definitely has been in a downtrend, right? We broke through this week, really nice candle. We really want to see tech hold this trend. NVIDIA is a large part of both SPY and the QQQ. So as NVIDIA kind of struggles while other stocks have been making a high, the ETFs are having a little bit harder time. Google was under some investigation as well with the DOJ. It's just putting pressure. Like there's reasons why tech stocks have been suffering a little bit more, and it's basically an economic issue, but it's also some legalities and some sector rotation, and that's fine. And speaking of sector rotation, I think one of the best sectors or one of the best indexes to kind of think about in terms of who would benefit the most from lower interest rates are the small caps, the smaller companies that depend on debt to grow. The larger companies like Google and Apple and Nvidia, they're sitting on piles of cash. The interest rates don't really affect them. If they reduce interest rates, that's not going to affect them. But the smaller caps, like IWM, it stands to benefit. And you can see, like we had a nice little pennant pattern here. Drew out on the chart. Been looking at this for the last month or so, I guess. Been in it since about July, and it just keeps testing the entry point over and over and over again. Got really close to hitting a target. I'm not looking to actually sell IWM. Like this is one of my longer term trades because as we look, let me zoom out just a little bit here and kind of look at these purple lines. Like IWM has been range bound since 2022. It's been trading in this range, and as you can see, resistance became support, right? And we're going to have some more resistance here, but eventually we like to see as for this to IWM is to start trading into resistance and then resistance becoming support, because I believe that these companies have the benefit of reduced debt to grow, and that's important. Now, the most important factor to me as an options seller, I love selling options. I make a lot of my income. I pay a lot of my bills using what is called theta decay, which is time decay. And that is all about volatility. The more volatile the market is, like during Volmageddon, I guess last month, where the VIX index spiked to levels we haven't seen since like COVID, or it was like one of the highest. I know COVID was a little bit higher, but it was one of the highest spikes we've had in quite a while, and it was pretty much overnight due to Japan's unwind trade, which is a whole different topic. But what I'm trying to say is volatility is at a historic low again. We're almost back to just where we've been all year, and as volatility goes down, premium received on options also goes down. There's not as much fear, there's not as much panic. So it's less advantageous for us to be selling premium right now. So what does that mean for us? What does it mean? I'll get to it in a second. Let's talk about gold, because I think this could be, they say like canary in the coal mine, like this is a little concerning. And I just have to call out any of the good kids who took my trade on gold. I really hope, like, you could just send thank you notes, like it's fine. But we played this doji. I know I played this doji that I called out, what was it, 3 weeks ago? And I mean, it just immediately rampaged, right? Almost to our target. It hit target yesterday. Pretty nice move in gold. I still have a little bit of my position, but I did unwind some of it for a really nice win. Did we think gold was going to break down? Not really. But this is another reason why we just need to be a little bit careful right now in our trading accounts. I'm not talking about your long term. There's nothing wrong with peeling off some of your long term if you have a plan for it. You need to have a plan and you need to roll into it. But as gold's going up, it's like it's signaling, hey, I'm looking for safety. That's what this says. It's going risk off. I'm looking for safety. And another place that people get to when they're thinking about safety is utilities. What are utilities saying to us? They're saying, I'm looking for safety. And by the way, we caught a really great trade. I hope you caught this trade with me. As the interest rate talk was happening, and the day after, like, interest rates Wednesday, market moon Lamboing on Thursday, it caused people to take their money out of utilities. There was like a little sector rotation for a couple of hours actually. But this candle that looks like a hammer, hammers are really interesting candles. They're great after they formed. But that hammer was looking about like this candle right here that I'm pointing at, like a bearish engulfing candle after 3 down days. And it was like, oh my gosh, are utilities going to actually go out of business? I don't think so. And that's why we sold puts. I sold puts over here. I hope that some of the good kids caught it in our live Discord, goodkidstrading.com, if you're not a member of our free Discord. But we sold some puts down here. I was like, I would own, I think we actually sold them a little bit more into this support range. But like, I would own XLU here. I would own some off of the 50, and I would just load the boat down here on XLU. Why? Because I'm thinking about all of the people who are about to stop losing the risk-free money in, SGov is going to have a cut. So I think XLU is a great play. When you look at it on the daily chart, look, it doesn't look great, right? And then on Friday, we had this beautiful candle coming back to where we're at all-time highs. Like, look, we're at all-time highs on XLU. Do you see how that looks so much nicer on the weekly chart than it does on the daily chart? I mean, it's just night and day difference. But listen, with gold at all-time highs, XLU at all-time highs. Yes, I know SPY is at all-time highs as well. RSP looking really good. RSP is the equal weight ETF, and it has new highs too. So like I was telling you earlier, like Nvidia is like 30% of SPY. Like, it moves SPY a whole lot just due to its size and its weight. So this just looks at the 500 companies evenly weighted. So we kind of get a little bit better picture of, hey, how are the top 500 companies doing? And they're looking pretty good, right? And that's because of sectors like XLU. Industrials are doing all right, but like we have multiple sectors participating in this. It's not just tech who has been in a downtrend, but like it's coming back. Tech's looking decent. So I think that there's opportunities for like SPY-D, which is dividend paying companies. Like, I like to pick individual dividend stocks. I've been doing this for 20 years. So I understand how my favorite dividend stocks usually trade. But if you don't know, you can always jump in some ETFs. I have lists of all of my favorite ETFs. I have watch lists of stocks under 100. I have watch lists of my favorite dividend stocks, and I offer those to my inner circle members. And if you're interested, I don't know if this is a sales pitch or not, but MrMoneyMaxwell.com, I guess it is. Right now, I'm offering it. It's just $100 a year. I'm giving you access to my watch lists, my ebooks. I just recorded a really cool video for the guys in the inner circle, just kind of going through some trades. I think it was like 15, 20 different trades that I'm kind of looking at right now, trying to give you some ideas of how I've built this wealth. So if you're interested in watch lists, you don't know where to start, maybe you just want access to some dividend ETFs that I like, that I've traded. Feel free to join right now. Use the code GKT. Prices are about to go up. It's not a threat. I'm just letting you know. I'm giving it away at a ridiculously low price, like $2 a week, because it's new. I'm ramping it up. It's only going to get better. But I think that what I'm saying is Spidey is a great, if you just want, like, look at this. I've had 2 trades that have already hit targets on Spidey. And some went faster than others, right? But I think that the reason I'm a little bit cautious and the reason that I might sound a little bit like a bear is because Colgate Palmolive, like toothpaste and dish soap, right? It's up like 40%. I mean, okay, it's pulled back a little bit. So it's up 30% in a year. Like, this is what you expect out of a growth stock. Like, this is what you expect out of speculation. So as the stocks and dividends have gone straight up, like, your risk antenna should be going off going, hey, I'm not sure this move makes a lot of sense. Like, how much more toothpaste are you going to need? How much dish are you planning on washing a ton of dishes? Like, all of a sudden we need toothpaste, and I don't know. Like, now we did have like a long period where, what is this, like since 2021, like after COVID, like it's been trading range bound, right? But it broke out. But my point is, and my style is, would you buy this stock up here, or would you buy the stock down here? And maybe you're that kind of trader who's like, hey, this is a small pullback and I think Colgate Palmolive is going to go to the moon. I'm going to buy now. That's cool. It's just not my style. It's not what I'm showing the good kids at Good Kids Trading how to do. And I think it's something that you should think about, right? I hope that makes sense. Um, Another really fun trade that I got in was Cisco. I hope that some of the good kids were in with me. I know a couple of you guys who were, but or still are maybe. But we caught a really nice trade on Cisco. We traded this on the daily. We just we took a little trade here. I think it's the monthly. We took a little trade here on Cisco. Saw a really nice trade here and hit my target, right? And Cisco dropped right back down to my entry. So do you know what I did? I mean, hopefully you know what I did if you're in my look trading. You're not sure what I did? Oh, we can just take a look. We can come over here and we sold a put. Sold a put on Cisco. I was gonna add some shares, but I sold this put on Cisco on the 19th, and I think the 20th it closed to the very next day that it hit target. So that's what I'm talking about with opportunities. That's what I'm talking about with looking for trades. You know, this day right here was really bearish engulfing. Oh, the end of the world. This is the day that we sold puts because Cisco was sitting right on top of a moving average and it bounced. And what do you know? It hit another moving average and it bounced. So for the good kids, don't be surprised when you see me go in here and put in another trade on Cisco. Probably have a little bit liberal of a stop because And I know I just repeated myself there. I was trying to do two things at once and maybe not the best multitasker, but like there's a risk. There's a really nice risk to reward here. So don't be surprised if you see me set this one up. I've also been looking at some more trades that benefit from sideways to up movement, but also have defined risk. Because I think we need to be putting on some trades. I'm not saying don't put on anything. I'm saying define your risk. Right now might not be the time to be selling strangles, even until we find the opportunity. Like I have been selling some strangles, I have been selling some puts, but I'm waiting for opportunities. So I've been looking at DraftKings. I think this chart looks really good. I like how it's hitting its head right here. I like how it's been here a few times before. You know, all these people are now profitable here. Um, let's just see what's going to happen. If we can get DraftKings to chop around for just a little while before earnings, we can sell premium every week and pull in some income. I think this is a great trade. I'm in this. I've posted about this. Where? In our Discord, of course. I know I keep talking about this, but let me take off some of the filters here, and you can kind of see like I'm in Intel. Intel got some great news. We're gonna probably close out of that one this week coming up. But you know, if you don't know how to trade or you want some new trade ideas, you can just come into Discord. You can look at the actual setup. I post a setup. I show you the options chain. I'm doing the same thing for Bristol Myers as well. So let's take a look over at the chart on Bristol Myers, and I want to show you what I see here is so Bristol Myers has a dividend coming up soon, right? We have a nice little dividend. I think it's like 60 cents, which is decent for the company. It's I guess you guys know it's a pharmaceutical. I really liked what I saw here on the weekly with this double bottom was beautiful, right? So we played this double bottom and now we're kind of breaking in. Do you see how I've kind of put the purple lines here? This line probably belongs a little bit further down, but like, do you see how it's been trading in a range for the last couple of years? So I think there's some benefit here and selling some puts with a long put. This long put is way out in like November, right? And so we start selling weekly puts here, and maybe we get put some shares. My goal is to get put some shares of Bristol Myers before the dividend. So I think the dividend's on Friday, October 4th. So what I'll do is I have that long put, right? I have the long put out here, and I will get these shares. I will sell a covered call. I'll collect the dividend, and that will generate a little bit of defined risk income using theta decay, which is what Good Kids Trading is all about. We want to use options to our advantage. We want to make trading passive. I don't want to sit there and look at charts every single minute for hours of the day because I am retired. I don't have a specific job other than creating content for Good Kids Trading like this, but I also don't want to be glued to the chart. And I don't think you do either. Most people don't want to be glued to the chart. They want to make trading passive income and profitable. Like you want trading to be passive and profitable. You want income, right? I mean, I know what you want because I want the same thing. And that's what I've been doing. So I think that that's a really good overview of where we are with the markets. And for the week ahead, I post this on the blog Good Kids Trading. I know I've said that like 100 times, but it is important because there's valuable information. Like I'm giving you information that most other people would charge you for. And I don't want your money. I really don't. I would love if you join MrMoneyMaxwell.com, the inner circle for $2 a week. It just helps pay for some of the actual hosting, all the really crazy things you don't think about when you're building a community and you have the little costs. But anyways, let's look at the week ahead. If you haven't noticed, we have the same routine every month. So we're looking at PCE on Friday. On Thursday, we have our GDP. You know, we were looking at a lot of the jobless claims. We were looking at CPI, but I think that now it's more about, it's not so much CPI. Like, don't get me wrong. If CPI, which is the consumer price index, if it comes in really hot, then that's a sign of inflation. And that would be a sign that Jay Powell would not like now that he just cut rates. But I think that one of our biggest concerns is these jobless claims and the government report. But anyways, we're looking at jobless claims again. So we want those to kind of come in um, within expectations. You know, you can see the expectation they have here. And we have Jay Powell speaking on Thursday. We'll see what he has to say. Got some PCE on Friday. PCE has been pretty much in line lately, so I don't want to jinx us here. But anyways, earnings. We don't have a lot of earnings, and I really love to play earnings when the VIX is low because I like to play after earnings. I hope for stocks to gap down, which, by the way, FedEx gapped down and it was ridiculously low premium, so we couldn't sell anything there. But that's enough about that. We have Micron on Wednesday, and we have Costco on Thursday. And like we're in between earnings season for the most part. You know, we just have a couple earnings a week right now. But these are two really big plays that I know the good kids are going to be looking into. And I hope that you will as well. So I hope this video was helpful. I'm going to do more of these. I know a lot of people don't like to read. I don't love to read all the time myself, but I think that will add value to you by creating it in video form. So anyways, I'm going to go pack and get ready for my cruise. I hope you have a great week, and I will talk to you soon. Happy trading, good kids.